So this video is probably going to be the most important trading video I think I will ever make, and I possibly think you will ever see, should we say. And I truly mean that, and I will try and keep it very short, because I know that the attention of most people nowadays is absolutely out the fucking window. Reason being is everyone's on TikTok and scrolling, and it seems to be that prop firms are now a challenge. So we sort of have traders, but they're not traders because they can't even focus on the chart. So I'm going to try and keep it short, because everything I say is going to apply to every single trader out there, whether they're consistent or not consistent. Again, of course, I'm targeting the ones that are not consistent. Okay, so let's start off from the very beginning, right? Why do people trade? Why do they get in? Well, it's because they see the money that is possibly made in trading, right? You see the social media the guru, whatever you want to call him, making hundreds of thousands of dollars. Now, chances are he's probably not making it from that anyway, but of course, as a profitable trader, you can make hundreds of thousands of dollars, right? I'm not saying I've done that, I'm just saying you can. So when traders come into the market and they see the possibility, right, you have to understand who is coming into the market, right? And new traders, at least, especially in prop firms. Well, it's people that are in a job, people that are in a 9 to 5, their salary is capped, their location is capped, but basically saying, you have to call your boss in order to get time off to go to work, right? So in a sense, you're kind of trapped, right? So you see trading as the tool to get out of that scenario, right? So you put basically trading on a pedestal, right? You see trading as that route to survival, that route to freedom, which of course it is. I guess it is that, but you're coming into trading with the wrong mindset of how much money can I make and how quick can I do it, because that is not how you become a profitable trader, right? A trader has to have a system, right? So the first thing as a trader, what you have to have is an edge. Okay, so an edge is something that plays out over time and of course gives you that profitable return. Now, I feel like I'm doing a speed run. I'm trying to keep your attention. So most people on the industry standard, they like to go for a 1 to 3 risk reward, which in my opinion, it's not viable. I'm a very high R trader, so I need to, and I think you'll see why I'm a high R trader. But okay, let's imagine you have a win rate of 40% and a average return of 1 to 3. So you're a profitable trader, right? Just about. Now, your risk of ruin, okay, this is the most important thing I'm going to say, risk of ruin, right? Now, what is the risk of ruin? It is basically your percentage chance of that account blowing up, basically stopping to work. So on a prop firm account, right, when you have a $100,000 account, for example, and you only have 10% max drawdown, well, if you risk 1% per trade, you only get 10 attempts. You can have 10 losing trades in a row and your account is wiped. So even if you have enough data behind you saying, look, this is my strategy, this is my win rate, think of the psychological warfare that's going to occur when, let's say, you lose 6 trades in a row. Well, what do you do now? Well, you have to win the next 4 in order to stay in the game, to carry on trading. What do you do? Well, this is where, like, a complete rookie is going to increase risk, try and get back to break even, over trade, because they think quantity of trades equals quality, which is not the truth. It's not the truth at all. More trades, in fact, equate to more losses, not more wins. Now, what we have to do, and this is what I have just taught my previous friend, shall we say, is we have to eliminate risk of ruin. We need to have risk of ruin at 0. The bottom line is in trading, okay, now this is very important, it's not about winning, it's about making money. Okay, that is essentially what trading is. Okay, I don't care if you have a win rate of 70%. If you can't manage your risk and you blow all the profit on the last 3 trades, what's the point in that? You have to be able to manage your risk. So if we take a look to a trade that I actually unfortunately hit break even on, okay, on Nasdaq, but if I show you how my system is so bulletproof, you would say, you can just see proof is in the pudding. But let me show you now on the chart. So what can we see? Right, this is a pretty big trade, definitely bigger than I normally catch. This was a 54 RR. Okay, let me quickly show you the break even. Right, unfortunately, as you can see, here's my break even. I entered here. Let me show you quickly. Let me cut to it so you can see. Right, here's my entry. Excuse me. Here's the break even. Right. So I was tapped out here on this wick, right? Now, I'm showing you this because this is a 54-hour trade, right? Now, as you can see, this is far, far, far above industry standard. Now, by having a high risk to reward trade, or system should we say, my risk of ruin is 0. Because think about it, I have now risked 0.25% on this trade. Now, given it didn't hit break even, okay, and it hit my take profit, I'd be up 13.5%. 13.5, risking 0.25%. Now, in order for me to obviously eradicate all that profit, I have to lose 53 trades in a row consecutively. In a row. That's like without winning a single trade. And that's just to wipe out the profit. That's before I even go into my drawdown. So imagine I'm obviously trading with, trading with large capital, right? And for example, on my fund, right? Because I obviously trade with other people. Tommy's and my fund, our max stop is 25%. Now, we know that we have to lose 100 trades in a row before we reach our max drawdown. 100 trades in a row. Now, when you incorporate your win rate with your average winning trade size, and of course your expectancy, you find that my risk reward is absolutely 0. In fact, let me show you the probability of loss from our system. So this is from our investor brochure, right? So as you can see, this is the brochure that I give to our investors, right? As you can see, right, this is the psychological edge of a low risk of ruin, okay? So understanding that our risk of ruin is practically 0, okay? It gives us a substantial psychological advantage, okay, when executing our strategy, right? This assurance allows us to focus entirely on systematic execution rather than being influenced by emotional responses to market fluctuations, okay? So our low risk model, okay, frees us from the emotional pressure that often accompanies high risk strategies. All right, this confidence in the sustainability of our approach allows us to trust the system. Okay, remember, trust the system. Right, stay consistent with our rules and avoid overreacting to short-term market movements. This is where beginners go wrong. Right, they overreact to short-term market movements, start increasing risk, and their account is blown. Right, emotional trading. Seriously, no, this is very important. Emotional trading is one of the biggest pitfalls for many investors and traders. But with the risk of ruin effectively eliminated, we are able to maintain a calm, focused mindset and stay fully in line with our long-term goals. The mental clarity and adherence to the strategy's core principles are essential to our consistent success. Okay, as we prioritize disciplined execution over the temptations of emotional trading. Now, the goal here, right, is to allow you to, because of course you trade well on demo, right? You do, and the reason being is because there is no emotional attachment. By having a risk of ruin of 0, that's the same thing. So imagine you trading demo but live, and instead of making demo profits, you can make live profits. That's essentially my goal here, is to get you to understand if you can have a risk of ruin of 0, if you know that you can't blow your account, why do you care about losses? Why? It's like a business. No business has a consistently profitable business. Business have expenses, they have taxes, they have stuff to pay. All of these should be considered as losses. As you can see, right, this is this is my risk of ruin, Tommy's and our risk of ruin. Okay, this is based off a 18 average risk reward winning trade, okay, with a win rate of 60%. So that was our data since April. Now this is the probability of loss, okay, so 5%, 0.063%, okay, amount of losing trades, 20 in a row, 20, okay, right, loss size, 10%, 0.00003%, I have to lose 40 trades consecutively. Okay, this is off the data from Tommy's April session till I think it was September, October. Yeah, this is when you know this, right, and you know that your probability of loss, even if it's slightly off, okay, when your probability of loss is so minor, losses are not even a part of trading. So again, it's not about having good psychology, it's about having no psychology. Because think about it, if you win a trade, that's let's say a 20-hour trade, okay, so our average is 18, I have to lose the next 17 before I'm back at break even, or 18, sorry. So if I lose the next 3 or 4 in a row, why do I care? I don't care at all, because I'm trading in profit. Even in drawdown, okay, even if I start a new account and I go into drawdown, right, I can lose 20 trades in a row before I'm down 5%. For example, last January, right? We had a losing streak of 18. We had lost 18 trades in a row. We had one winning trade and the whole thing was eradicated. So by knowing this, psychology is not even a thing. So the bottom line is, as traders, okay, you need to get your risk of ruin to 0, okay? You need to have a positive expectancy and you need to trade high RR. I promise you, because look, of course you can be consistently profitable with low RR, but again, you have the potential of that losing streak coming in and your psychology taking over. You have to account for the worst, especially when trading, let's say, low RR. That's what trading is. The bottom line is that, again, I know I'm repeating myself, but you have to account for the worst. So if you trade 1 to 3 or 1 to 4, okay, and again, I'm repeating myself, but it doesn't matter what the data says, okay? There is still a risk. You're human. You're not a robot. The bottom line is you are human. Of course, you will have emotions. Even if you've been a trader for 10 years, it doesn't matter. If your strategy says, look, my win rate is 40%, okay, but for whatever reason you lose those 6 trades in a row, and then now you're meant to, of course, because of the data, you're meant to win the next 4, and you lose the next ones. Now you're thinking, well, the data's wrong, I'm going to start increasing risk, and this is essentially how your accounts snowball, and you just, it's like self-sabotage. So, like, as you can see, by having a high risk to reward strategy, you literally eliminate the risk of ruin, and by eliminating the risk of ruin, you can trade at ease. Again, it sounds a bit cringy, but it's like, how big would you dream if you knew you couldn't fail? It's like this is the exact same thing. So yeah, hopefully you guys understood keeping your risk of ruin low, 0 in fact, and removing psychology. Okay, you know, it's not about how many trades you win, it's about making money. Okay, win rate isn't all of that. If your risk reward is low, win rate, it's not all of that, you know. That being said, I'm not here to sell you anything. Of course, if you want to learn with us, fantastic. If you don't, that's no problem. But what you must do is you must find a system that is high enough RR that you're able to remove the element of psychology. Okay, you want to have enough breathing room between winning trades and losing trades, right? So if you hit a winning trade, you want it to be at least 10 RR, at least, because then you can lose the next 9 before you start, you know, encroaching on your equity. Okay, like I said, since April, our average RR is 18, and yeah, as you can see, it's working clearly very well for us. So yeah, there's not really much more I can say really within this short time span. Of course, there's a lot more to go into, but I hope the recognition of risk of ruin is enough to change your life essentially, because that is what consistent trading is. It's accounting for the worst case scenario and still surviving, because then that is essentially the definition of bulletproof. Yeah.